Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast number 216. This edition of the Moving Iron Podcast is brought to you by TractorZoom Delivering Insights. And the reason that's brought to us by the people at TractorZoom is because I got Kyle McMahon from TractorZoom on, and we're going to talk about what's happening in the auction, man. So, Kyle, how you been?
Good. Thanks for having me on, Casey. It's been a while since we've been on the podcast, and there has been a lot happen in the market, so I'm looking forward to diving into the details.
Yeah, there's a few things have happened, right? There's not it's not like there's a giant swarm of people wanting to buy a bunch of used equipment, new stuff at all, is there? There's hardly anything going on. It's pretty quiet. Auctions are slow. Just the same old, isn't it?
It's something like that, but I think people have a little bit more cash in their pocket and willing to spend it.
A lot more optimism out there, a lot more things going on. So for those of you that don't know what TractorZoom is and who Kyle McMahon is, Kyle, why don't you run that down real quick about who you guys are, what you're doing, those kind of things.
Yeah, TractorZoom is a website that advertises farm equipment auctions from over 480 auctioneers across the entire country. Then we also have another company called Iron Comps, where it provides people like Casey the insights into the auction market and the analytics that we see and market trends. So then you can better price equipment, better do deals, and get more exposure into what's actually happening in the auction market. So what we're really doing is we're on a mission to streamline the allowing people to find and value farm machinery quicker than they ever have before, and continued on that mission for the last 4 years of the business.
You guys have a great product out there. There's usually when I see a new internet thing pop up and whatever, that somehow it's going to completely change my life, and then I look at it and I'm like, ugh, this sucks. But TractorZoom hadn't been like that, man. You guys have done a great job of keeping, it's really that, because I talk about it all the time on here, the canary in the coal mine, right? It's the one catalyst out there that, really can start seeing things take place and take hold, and you can really see things kind of derive out of a certain thing when you start looking at trend lines, especially in the auction marketplace and how they see. So why don't you just give us off the data that you're pulling, just as from a 50,000 foot view, kind of what are you seeing out there in the auction market right now, and what are the trend lines that you see happening?
Yeah, well, not unsurprisingly, overall the machinery market's up from values, right?
Absolutely.
But I really think I could dive into each asset category and what we're seeing in each of those, but I think the overarching view that we continue to see in the auction market across all 480 of those auction companies or auction partners of ours is lower inventory, which has less optionality for that buyer to be purchasing that equipment, right? I think you guys have been talking a lot about it on the Moving Iron Podcast, lower inventory and equipment's a supply and demand marketplace. And when farmers have $7 corn, even if they might have sold a lot of it back at $5, it's still very profitable times. And people have had a lot of aging equipment that are getting hired houred, where the focus is really on that low houred 1, 2, 3, 4, 5 year old piece of equipment. And that's definitely what we're seeing in the market. What's been really interesting, I guess a few really key pieces of what's been very interesting to us is lower horsepower tractors, say that 40 to 100 horsepower class, has actually grown the most. different demographic. Not many farmers playing in that segment, but year over year, those prices are up 33%. Where if you look at row crop tractors, those are up about 15 to 22%. And a lot of that focuses on that lower hour row crop tractor into that 2,000 hour mark. So a lot of focus there. The other interesting thing is we have not seen many combines sell in the first quarter the first 2 quarters so far in 2021. And, we don't have a lot of data to really represent what's going on there, but it appears to be a pretty flat market.
Yep.
But I think that focus might be shifting. What do you think? What are you hearing from
Yeah, so again, like I track these numbers every month. I get a report that shows me how many machines are on listing sites, right? And on the retail side. And since the first of the year, we've seen a few things kind of trickle off, nothing really big, nothing really overwhelming taking place. We've seen some growth in inventory since over the last couple of months, but a lot of that is to do because a lot of these early, wheat machines and stuff like that are getting delivered. So we're seeing more used combines kind of come on the marketplace. I am fully prepared that after April, going through May, June, July, that we're going to see a huge spike in the number of used combines that get sold, especially those late model, low-hour combines. There's a lot of like S700 series combine inventory out there that's 17, 18, 18 and 19 model machines that maybe not have the 250 hours on them or 300 hours on them, but they've got the 500 to 600 to 700 hour machine kind of hour range on them. And the guy that's got 1,500 hours now is going to be looking at those machines and looking at upgrading those machines and what that looks like. I think that there's a fair amount of combines that are going to come off the marketplace here in the next 30 days. I'm pretty anxious to see what the May numbers look like when I get that report, and then where that hour range looks. That's the other thing too is I track is the number of machines in a given hour range and what that looks like. And for the longest time, it was always that 1,500 3,000 hour combine that was kind of holding up the whole circle of the combine washout cycle. And now if you take a look at that, those numbers they're pretty even across. I mean, there's not just a whole bunch of machines in one little area. They're kind of starting to fill in, and we're starting to see things take off and starting to kind of fill in those gaps, especially that less than 1,000 hour machine. So I really do believe that there's going to be a pretty big run on a lot of stuff, primarily combines, corn heads, draper heads, those kind of things. We're going to see a pretty big push here in the next 30 to 60 days that it's going to do us some favors more than anything. I mean,
in what way?
Well, with this whole COVID thing and not being able to get supply and just the way anything has been right now as far as supply chain things go, this is a kind of an unprecedented kind of a twist to the used equipment market right now, right? So we don't have. Typically, you either have a bunch of used equipment to sell and not much new equipment to sell, or you have a bunch of new equipment to sell and a bunch of used equipment because everyone's trading in their used for new, right? Well, right now we don't have the new equipment coming in that we can sell when guys want the new piece. So they're going back into the cupboard and looking at some of this later model stuff, some of this maybe not the low-hour stuff, but maybe they're looking at that 500-hour machine. When they wanted that new one, they're going to take that 500-hour machine, run it for a year while their new one's on order or something like that, then trade that machine back in after it has, a season of use on it or something like that. Or they could just be like, well, the new one's kind of expensive anyway. This used one looks better. I've got some capital. I'm going to go ahead and jump up and buy this thing now. So we're seeing this rapid depletion of the used equipment across the board, whether it's, whether you're looking at tractors, like you and I were talking before we started recording. Tractors is a great example of that. There were 13,000 some odd number of tractors on the market in January. We're down to like 9,500 or something like that. But the bulk of those machines were sold. There were 1,000 or 1,300 and some change sold in March, and there were another 1,000 sold. They were taken off the market anyway. They had no trade-ins coming back in behind them. 1,300 in April. I'm sorry, 1,300 in March and 1,000 in April sold. So, I mean, of that 3,500 machines that have been taken off the marketplace since January, 2,300 of them were sold in 1 month or in 2 months. So, we're going to continue to see that go, and especially in a year where there's going to be some profitability. I think guys are kind of factoring that fact in. They're going to have some profitability coming in. There's just not going to be the machines out there. You know, we're not going to have that whole stock of new equipment sitting on the lot in September, October, November like we've had in the past, you know, going through the end of the year. We're just not going to have that stock there because what we have coming in on stock is sold. I mean, we have the overwhelming majority of it sold. So it's one of those things where that used equipment's going to be there, and it's just going to, each month is going to get more, you know, it's just going to be a multiplication factor every year, you know, every month over month over month, where we're going to see this roll to the end of the year. And, you know, by October, November, December, the highest auction months that are out there might not be enough equipment to fund auctions to even go out and even have an auction, you know.
So, and you're hitting on something that I'm making myself make a phone call every single day to try to figure out what's going on here. As we have this inventory depletion, it's going down very quickly.
Yeah.
And we see it in the auction industry too.
Yep.
It's everybody is upgrading, but they're adding to their fleet. They're not just replacing it.
Exactly.
Which is why you're not seeing all the trade-ins. And if you sit back and look at like, okay, if we continue to have these global economic supply chain issues, how fast can the OEMs turn on the spigot to fulfill orders? Like I think John Deere has a $9 billion back order on inventory, and they can't hire the people that they need to help build the machines. I think the Waterloo plant in Iowa has like 400 manufacturing job openings. The Dubuque plant has 75 job openings. So they're not going to be able to fulfill those jobs. They can't get the material to build those pieces of equipment fast enough. So I'm sitting back trying to understand what is that going to do to the used equipment market on a proactive, like forward-looking basis. And I think if we start to look at the data that up until now, what we're starting to see is there is that really big focus on those low-hour pieces, but they're just getting consumed by the market versus replaced. So what point in time will we see farmers say, you know what, I just bought that new S780 and I have those other two S680s in the shed, or whatever it is they're adding to their fleet, and they turn around and go, well, I don't really need it. I'm paying interest on it, or I could use that $200,000 for something else. So at what point will we see them dump that equipment back on the market?
You know, I think that'll be one of those things where, because right now, if you take any 2012, 2014 model combine that's got, you name it, 2,000 hours on it, 2,500 separator hours on it, something like that, the auction value hasn't really changed for those machines, right?
No.
And to your example, that's what's sitting in the guy's shed that he didn't want to trade in because he's going to get, you know, he's getting 80 grand for it, or 50 grand for it, or 60 grand for it, or something like that. Take it to the auction, you're still getting the same, you know, $50,000 to $80,000 for it, maybe 90 grand, depending on if it's, you know, better than everything else around it, type of deal. I think what you'll see is when the market gets to a point where the guy that's got this, you know, the 2008, 2009, 2010 machine, and they're looking to kind of jump up to do that because their machine now's got, you know, 4,000 or 5,000 hours on it, type of thing. And they're going to say, well, I'm going to go ahead and graduate up. You know, I'm going to cut my hours in half. I'm going to get that 2,500 hour machine, you know, because I'm small operation, do my own work type of stuff, you know, whatever. Get that machine, kick it back down. When that guy starts paying 125 grand for that combine that was worth $80,000 because the demand that's not necessarily what the guy even wants, right? But that's what's available in the price range he's wanting to spend in. That to me, you start to see that. That's when you're going to start seeing those things come back out. And to be honest with you, I think we'll see a lot more on-farm, you know, farmer selling to farmer type of thing than we'll see dealer buying it from a farmer, selling it to another farmer someplace else. I mean, I think you're going to see more of that. We're going to see more of these, you know, classified ads in and whatnot that are going to start popping up and doing those kind of things. So I think that's where that'll be from. Now, if this thing continues down the same path that we're going on, and we see the same situation this time next year, it's better than it was. Next year's better than it was this year, but it's still not there yet. You could really start seeing some used equipment values that are going to be kind of like that. What was that? What was that stock that everybody's jumping on and got up to $400 when GameStop? Be something stupid like that, where you start seeing these used machines that are bringing just slightly under the price of a new one, or you start seeing a 5-year-old machine that's now 40 or 50% higher than what it was 5 years ago, type of thing. And that's dangerous. That's a dangerous territory to be in, because then you start getting people where, when the market does come back down and does correct back where it should be, and the supply gets back in there and meets up with demand, all of a sudden that machine you're just there. You know what I mean? So I'm not like so doom and gloom that I'm really worried about that there's going to be some huge whatever, because believe me, these manufacturers are going to figure out a way to manufacture equipment. However they figure that out, however they get that kind of thing worked around, they're going to figure it out, because they quit making money on selling used equipment off the factory line a long time ago. So it's one of those things they've got to go out and produce new equipment. They're going to figure it out.
Yeah, no doubt they will. It'll be an interesting next 1 year of what that inventory will look like, and I'm curious to see how far the inventory depletion will continue to go from the dealer level and what we see at auctions, and really what that does to the used equipment market, because then people have to realize that, okay, well, I'll just maintain what I have if I can't buy that nice new piece that I want, or I'm not willing to accept that price premium that the market's willing to bear right now.
Yep.
So that I'll service it. Well, parts might take a little longer to get to me if I have a breakdown.
Yep.
So I think that might be also playing into why people are adding to their fleet. Mm-hmm. They want that late model, but at the same time, they're recognizing it's taking a little bit longer to get parts. So they want that assurance to have the backup, and they feel like $6 corn is the perfect opportunity to do that. Yeah. The other thing, Casey, that we've recognized just here since December 1st, we have seen a significant decrease in retirement sales. Yeah. And at retirement sales, we've seen over the last. I mean, it makes sense, right? Everybody wants
perfect. Oh, God, we're one more run, one more wave, boys. We're going to ride one more wave.
But what that's done to the market is those retirement sales have brought some really good equipment to market, and people are willing to pay for that because they feel like Farmer John just 10 miles down the road. I know him, he takes care of it, he waxes it, and that brings good equipment. But what that's done is take that equipment off the market, not show up at auction, and over the last 4 years, we've seen an average. Over the last 4 years, we've seen a 22% increase in the number of retirement farms selling 2 combines versus 1.
Right. Yep. No, I think you're right. I mean, there's kind of to hit on the point you just made there about the the guys that are not trading their stuff in and how that comes to retirement. Now, obviously, right now, guys are like, I mean, every time you turn on the TV, you read anything about what's going on in the grain marketplace. If we had trendline yield in corn, soybeans, and wheat, we'd still be at zero, right? I mean, so, we'd have to have some remarkable, grow 3 times as much corn as we have ever grown and ever to have a surplus, you know what I mean? So it's just one of those things where it's out there. And I think these guys read that. I mean, I'm looking at this thing right now, and I'm pulling some levers and doing some stuff now that I would have never thought I would ever even be talking to people about, because it doesn't matter what happens. It's going to take 3 years to fill back up the used equipment back to where we are right now. It's going to take that many selling cycles to get it back to where it was at the beginning of 2020. You know what I mean? Going from 2019 to 2020. I mean, that's how much things have changed, from what we saw even that far ago. You talk about the retirement thing. I was sitting next to one of our sales guys, and we're talking to him, and good friend of mine, I always try to find the most seasoned person in the room and strike up a conversation with them because I'm going to learn something from them. And I was I was poking some fun at him. I was like, "What are you going to ride this one more wave for you, buddy, before you retire? You're gonna ride it out about 3 more years and hang it up?" And he's like, "Oh, you've read my playbook," and we were joking back and forth about that. But that's kind of the same thing with all these farmers that have hit that 65, 70-year-old range, and they're thinking to themselves like, well, I've got an opportunity here in the next 3 years, probably to regain all the equity I lost the last 7 years, and then when I get to that 3 or 4 year mark, I can hang it up, and I'm going to be right back where I started at, and then I'm having a retirement sale, and I'll ride off in the sunset and get my 100 horsepower tractor for my 5 acres and call it good, and run around with it and have good times. But I think that's kind of the mentality that we're starting to see right now with a lot of folks in the ag industry is that I got one more wave. I'm going to ride it till it start to see it cresting, then I'm bailing, and I think that's what we're going to see.
It wouldn't surprise me, but I think we did see that in the 2014 run up and then the years after. Yeah. If we learn from that economic cycle, guys hung on to it a little bit longer until it was 4 years of break-even price. They finally said, "All right, I better hang it up now."
Yeah, the thing about the last run we had from 2006 really up till 2014 really. That's kind of where 2014 was like for sure the end. Some people say 13, but 14 was for sure like, okay, everyone's coming to agreement that we are in a downward cycle right now. You almost had a 10-year run of just no matter what you did, you made money, right? And I think that 7 years still in people's mind that of what we had done over the last 7 years, because typically you'll get a 3 or 5 year cycle that really lets you turn and burn. Then you'll have like a 7-year drought, and then you'll have this 3 to 5 year cycle again. A lot of economists I've talked to, and I hear and I listen and I read what they're talking about. And they're saying like this is a 10-year thing again, like just based on the economies that we see right now and how the whole world is kind of coming together with the economics that are out there. It's not like the U.S. is a place where there's a shortage of grain. Hell, China can't buy enough grain. Brazil's going to have an issue growing their corn crop this year, which was supposed to be the corn crop that was going to save the world, and they're falling short on that. Europe is doing the same problem. They've got wheat issues with freeze and everything else. The Black Sea region is struggling the same way. Australia is having a good wheat crop for the first time in 4 years or whatever. They've had some stupid drought down there. Seems like since I was born, but they've got an opportunity to where they're going to have some really good opportunities to shower the world with their grain. But that's just one place. It's not like it's a big amount of area that's so everyone's kind of struggling through this, and it's going to take a while to make that all work back right. And it's just going to continue to see that pressure grow. And I don't think inflation is. I think there's going to be some short-term inflation that we have to worry about, but I don't know it's a long-term problem. I think it's going to be. We're going to see a lot of because we have this big growth coming out of where we're at. But I just think that this thing is a. I think we got a good 3 to 5 years worth of kind of upward trajectory here before we get to a point where people need to start being metered about what they're doing and what does that look like. But in the meantime, the supply thing is going to be a problem. It's going to continue to be a problem, and especially with on the used side with the price of new equipment, because there's some of these guys are just going to be, no matter how good it is, they just can't justify the price of whatever, but they can justify the used one. And so that used market's going to stay strong. I think it's going to stay strong longer than we saw it this last go around.
So with all of that said, your early order program starting June 1st for planters, is it?
Yeah.
That'll probably get taken up relatively quickly.
I don't think that any manufacturer is expecting to see 7 days worth of orders come through. I think you're going to see 7 hours worth of orders come through, and that's going to be about the gist of it. I think it's, if you're listening to this and you're wanting to buy a new planter, whether you're buying a deer, a case, of whatever, and this is your chance to go put the new order in, you better be ready to do it, because it's not anything that you're going to be able to I need to talk it over with the what. you need to either you're doing it or you're not, and you've got a very short amount of time to make that decision because it's going to happen quick. And
so the guy who waits to the 8th hour, the guy who waits to the 8th hour and doesn't get it bought, he's going to have to go to the used market likely,
right,
or go to brand or something. And then he or she is going to have to find something in the used market. And if they want to upgrade, if they're still on older technology or they want to upgrade to high speed, that's going to play a bigger role in used equipment too.
I think so, yeah. And I think one thing I've been thinking about this a lot too, whether it's on any machine that comes to the EOP, some guys might order that new one and be perfectly fine with, all right, cool, you're going to get your planter, but you're going to get it in August of 22. Right, you're not going to be able to plant with it in the 22 planting season. But in his head or her head, he's like, you know what? I'm good for 23. Right now, what does that do to used equipment as you start going through this? You've got an extra bunch of hours that are going to be on some maybe what would have been late model low hour equipment. You got another season of use on whatever it is, so that could have an effect too on what we see happen in used equipment, which could just means that now the late model low hour stuff, what is considered late model low hour, has just moved up the spectrum a little bit, and now the 500-hour combine is now late model low hour combine, and the 900-hour tractor is now late model low hour type of thing. It's just that relativity, relative to the situation where you're at, I think could start playing a big role in what we see happen in used equipment.
I couldn't agree more, and that's kind of as we sit around and analyze all the data at TractorZoom and Iron Comps. That's really what we talk about. We haven't seen combine prices take off necessarily like we have tractors.
Exactly. Yeah.
As that focus shifts from planting to harvest season, we're expecting that demand to really show up on the combine market, just like you are. There's a lot of inventory out there. We can start to see that inventory depletion. But again, it's the optionality and what can I actually buy, and that could create some, as we joke internally, the toilet paper rush. They don't want to miss out, right?
Right, yeah, exactly.
Because they want that new shiny machine because corn's $6-7.
Right, and I think when I look at combine values, exactly to your point, there's nothing out there that's made the combine worth more than it was. I mean, everything else around it has shot up in value, and because. Typically, the tractor is one of those things guys kind of update more than they update anything else, just because it's more justifiable. The cost, I can use it for a loader tractor. There's a million different things that they can do with them, and not that a combine isn't justifiable, because Lord knows you need a combine to get your crop out of the field, but it's just been one of those things that's been so expensive to upgrade over the last 7 years that. It's just kind of one of those things, like I'm pretty good where I'm at right now. I can see the value of a combine increasing, starting to see that move up in value, probably August, September timeframe. And then it's just going to keep getting more, because by that time that I think a big chunk of this later model lower hour stuff is going to be gone by then. And what is left is going to be drug up by the relativity of, all right, cool, so all these late model hour stuff that was already priced is gone now. The second wave's coming through, which isn't going to be much. There won't be many of them. But when it does come through, those are going to be priced higher, right, because you can get more for them now. And that, in effect, is going to bring up the value of older, 12, 13, 14, 15, 16 model combines along with it. I think we're going to see that happen. So, I've told every customer I've worked with this year that if there's anything that you want to upgrade this year, anything, whatever it is, even if it's just a rotary hoe, whatever it is that you want to upgrade, this is the year to do it, because you're going to be putting your stuff on the market on the upswing and not, at the downswing. So, tractors, combines, tillage pieces. I've been watching tillage pieces real close, because that's one of those pieces that get a little bit ignored when there's not that much profitability on the farm. Used tillage stuff seems like it's been selling pretty well. Because again, now you start looking at some of these steel surcharges that we're seeing from these short line manufacturers. I mean, you're talking. I've seen them up in anywhere from 18 to 37%. In steel surcharges. I mean, so it's just there's that opportunity that if you have that 3 or 4 or 5 year old tillage piece, that you're going to get the most for it right now, just because of the relativity of the price of the new. So it's just new value is going to play a bigger role in the price of used than what we've seen, in the past. We're going to see more of a correlation with price increases and those kind of things than we've seen in the past.
Yeah, I could see farmers coming to their dealer and saying, "Hey, I want to buy the new piece." Then they get a little bit of a sticker shock, just because that's what it takes to make it right now. Yeah. Everything, the inflation, there's a lot of key components that go into the price of equipment raising, and so then they say, "You know what? I'll feel like I'll save a little bit of money and go to the used market, but be willing to repair it and accept the fact that I'll be repairing it." But you had just talked about the combine market. That the auction that's coming up that we're interested in really watching to see what happens and compare it to previous sales is that Sullivan Auctioneers is doing a dealer sale for AHW over in kind of northeast Illinois.
Yep.
That'll be a really interesting auction to watch. They've got 28 combines. 5 are the S700 series. I think they're all S780s, all two-wheel drive, uniquely enough.
Yeah.
And the rest are S600 series combines, and then a few Case IH 8230s, 8240s, and 2 Klosses. So I think that'll be a good testament just after planting season of what we should expect the remainder of the summer.
Yeah, I think so. That's going to be. I haven't had a chance to take a look at that sell bill. I'm aware of the sell, but haven't had a chance to really digest that sell bill much. But whatever's on there that is going to be quote unquote late model low hour, on the combine front especially, is going to be. That's really going to be the tell of the tape for what comes for the year, right? I think if combines are flat and we still don't see much of a movement up on these combines, then my theory of people are going to update combines, are going to see this big glut of machines get taken off the market. I'll probably have to eat my words on that, because if they don't happen then, I don't know when it'll start, because that's by now people have factored in their profitability for the year. They've kind of got a plan put in place, what their marketing plan looks like, and those kind of things as they start rolling into fall. And if we don't see a big move on these combines, then I'm going to have some regrets about what we're doing with combines, because it's just I just feels like there's going to be that snap in the rubber band. It's going to finally snap, and I think it's going to happen May and June as we move forward.
Well, it certainly could, and I think just from the data that we've analyzed, there are 2-year-old combines that have less than 500 separator hours are the combines that are getting about a 10% premium
right
year over year from right now. And that Sinclair sale that Sullivan did last year that really was the talk of the town for, it seemed like, months, that really set the standard last year. Then this year, almost a year to date, this sale is happening. A lot of good inventory. I think the difference that we're seeing right now is last year when Sullivan's sold that equipment for Sinclair, the big thing why that auction was a success in our opinion, personal opinion, and our data opinion, was they brought different equipment to the market than what the market's seen in the previous year. There had not been that low-hour, late-model machines at auction, and so people got over their skis and they didn't put their hand down. Well, we'll see what happens with this one. There's a difference of what we're seeing in the combine auction market right now. There's been a big slowdown of combine inventory at auction. So we could see, number one, combine inventory is back at auction. Same market effect could happen here. The second thing that we're seeing is with these machines, it doesn't appear there's any warranty on them. And for a dealer sales already get a premium at auction compared to different types of auctions, whether they're consignments or retirement. That warranty really plays a huge role, especially on sight unseen bidding, in opening up that buyer pool. We don't see that here But again, this is the inventory that the market hasn't seen since December.
Yeah.
Corn has gone up
Right.
40-50% since then.
Yeah. I think this might be one. A lot of dealer sales that you watch, they'll have that. We put Power Guard on, or we've got whatever. We've got this, that, or the other thing. They've got the other thing that you see too is they offer some low rate financing or something like that. They kind of toss a few things around. What I would, I don't think this year you need to do any of that. I mean, I think it's one of those deals where if you want it, there it is. This is what I've got, and oh, by the way, this is your choice. So, I hope it works out for you. I really think that's where we're at right now, especially when it comes to used equipment, especially in the marketplace. I think you have more guys that are going to be looking at what it means to have that. What's what I'm looking for here? They're going to kind of wait and see maybe what's going on, and then go back and talk to their dealer about stuff, because I think what they're going to see is, well, I can buy this one here at this auction for, throwing out numbers here, $200,000, right? Or my dealer's got the same thing for $200,000. So what? And I can work my trade in on that, and I can look at the the financing options and those kind of things that play into that. That's the one thing about auctions that I've noticed right now is that there's no real difference between an auction value and a retail value. They're pretty close to each other. There's not much draw there that's going to make someone say, "Dang it, I wish I would have just traded it at the dealer," because I think you're getting about the same money.
Yeah, well, as you say, the canary in the coal mine. This is starting the summer off for the rest of the auction season from June all the way till September. They should be setting it off on a pretty good note, I would expect.
This year is just going to be a crazy year. I don't think that this is uncharted water. I don't know. I've talked to a lot of guys that have been doing and been in the equipment business for a long time, and they've seen lived through the 80s and the early 70s and those kind of things, and some guys have compared this to the late 70s, leading up to the 80s with the huge run ups in prices and inflation and so on and so forth, and what that looks like. But there was never a time where they couldn't get something. You know what I mean? And as long as we're still in that a scarce area of supply, prices are going to stay high, no matter what it is, whether it's machinery or toilet paper. It doesn't really matter. So.
No, that makes a lot of sense. Well, that's what we're seeing in the market.
Well, let's talk about what's been going on TractorZoom. What do you guys have been up to? What are some of the new stuff that you're adding to the product?
Yeah, our software engineering team is working really hard with. What we do is listen to the customer as much as we can. So over the last really few weeks, we've been hitting the road, understanding the additional things that we can build inside the product, and we keep hearing a lot of great things that you'll see us do over the next 6 months that will significantly help our customers on the Iron Comps product, as well as just really staying committed to the auction partners that we have on TractorZoom and making sure that inventory is available to farmers at all times and different platforms. So we keep working really hard from a technical perspective and adding in different analytics that people will see in the products coming out. But there'll be some big changes at the company as we continue to grow and continue adding some really intelligent people to the team, and again making sure we're customer focused. That's the only way we can build the right product is listen to the customer. So that's one thing that we're the most excited about, and keep tracking these trends and understanding how we can use all of the data that we have and the trends to help our auction partners, our dealer partners, and even the banks that partner with us.
Yeah, I will say this: the market's going up, and great things are happening, and I think that's awesome. And I'm excited about what the transition looks like going forward. More people get hurt on the up than they do the down, because they get hurt because of the when they go out and buy a bunch of stuff, and as things come down, they get caught. So I just say keep that in mind, and working these auctions and understanding what's going on there and watching these trend lines develop. If I'd have paid more attention to stuff in 2013, 2014, might not have hurt so bad. You know what I mean? So it's just one of those things where, it takes 3 data points to create a trend. And when you start seeing that trend line develop, you need to start making decisions about what you're going to do, what your contingency plans look like, and what those are. And I can, believe me, in 20 whatever, when I start seeing these trend lines develop, I will start making changes as to what we do a lot sooner than I did in 2012 and 2013 for sure.
Yeah, I mean, the whole mentality of somebody in agriculture and any commodities-based business, and you can start to see those trend lines develop. That's naturally how you need to shift your business model, right? In the auction industry, we saw a lot of momentum. Purdue puts out their farmer sentiment survey.
Yep.
It just skyrocketed in October, November, and then it peaked in December because everybody saw, I think we had like 475 CBOT corn at the end of December. Little did we know it was going to go all the way to 760 or wherever,
right?
Almost $8 wherever it peaked. But we, in the months of January and February, we saw people paying more for equipment than what they actually did in March and April, which is still for big auction seasons. But our best estimate to that is people got excited over making money, and then they realized input prices are also coming up with the cash.
Yep.
So then it's actually, okay, back to core business decisions. We have high prices, but high prices aren't going to solve all of our issues. So.
Exactly. Yep.
And actually, that changes the used equipment market, and so we're being agile in our business at TractorZoom to make sure we're keeping up with that.
So I think the one big takeaway that I'm going to really lean on, and it really depends on what happens with new taxing and those kind of things, new administration, what have you, with Biden's administration, whatnot. But I mean, the big thing in 12, where the new equipment was just taking off and flying like crazy, and a lot of these traditionally used buyers were buying new, was you had Section 179 that would give you 100% depreciation in the first year on a new piece of equipment, not on a used piece of equipment, right? So when guys would actually sit back and crunch the numbers and look at everything and what the tax benefits were and yada, 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 it was kind of a no-brainer to buy the new piece, right? Well, now if that Section 179 stays the same and they can take that first year depreciation up front and on new and used, I don't know that new problem, or the new selling to traditionally used buyers is going to be such an issue. I think you could see some guys that maybe step out a little further on that later model, lower houred used piece and buy it at a premium, but I don't know that they'll jump up to buy that new piece because they're going to get the same benefit, maybe at your percentage is a little different or something like that. The dollars that generate might be a little different, but is that extra $20,000, is that juice really worth the squeeze? And I don't think it's going to be. I think guys are going to be more focused on really looking at their balance sheet. And the biggest kind of wild card out there, the kind of, what do they call that, black swan out there that's going to have a big effect on used equipment is how these leaps in technology that we're seeing year over year over year, what does that start looking like, and how does that start playing into the system? And more of this stuff is going to start having an effect on just the sheer profitability of the way guys are going to be able to take this new technology and spread it across a larger number of acres. Will allow them to afford more technology that's going to be able to save them a bunch of money on whatever it is that they can do with it.
Yeah, I couldn't agree more. We're a technology company at heart. That's who we are, and adoption can always be a challenge in agriculture technologies. Adoption is the number one challenge, in my opinion, of getting agriculture to adopt new things. I had a mentor who used to work at John Deere tell me yesterday, whenever you run into that, just make sure you ask them, when was change a bad thing in business? And it kind of makes you think about that aspect, and you can start to really understand the farmers who've been farming their entire careers, the ones that were willing to adopt technology, even if they're the second mover, they weren't the first mover on the technology, but they stayed current with that technology, which increases productivity, which increases the best times to be planting in your field, to be in your field, reduce compaction, whatever that might be, and just being able to utilize the data inside of your field analytics to your actual operation and your investment strategy.
Exactly.
And that's the same thing that we think of on the equipment business. If you look at how many farm management companies were started over the last 15 years, we'd be counting all day. But if you sit back and look at the top three assets or core expenditures inside of a business, it's land and cash rent, and then it's equipment, and then it's input cost.
Right.
So how can you make sure that you can leverage all three of those investment strategies and data-driven decisions to make the best decisions possible? And, it makes sense to you and I, we're both pretty big data geeks. And that's why we like to watch the equipment market, and that's why that's why we're on the podcast talking about data and trends. But being able to implement that into your investment strategy machinery is critical in our opinion.
Yep. No, I totally agree with you. Well, we've been banging out here for about 45 minutes. If you wanted to get more information about TractorZoom and Iron Comps, Kyle, what's the best way for folks to do that?
Yeah, if you're looking for machinery coming up for sale, go to tractorzoom.com and browse all the equipment from those 480 auction companies. If you're looking to help price equipment or understand equipment pricing market trends, go to ironcomps.com. Additionally, if you didn't get enough from me, you can, if you're in the financial world or a bank within Iowa or around the state of Iowa, I'll actually be talking. I'm on a panel next week on May 27th with the Community Bankers of Iowa, talking with Don Van Howling of Van Wall and Arnie Sinclair of Heartland Ag Systems, just having a panel of what we're also seeing in the market. So I imagine we'll talk about different things than we did today. And then we also have a farmequipment.com webinar coming up May 26th, which is next Thursday, I think. Go get signed up from that. One of our biggest data gurus, Andy Campbell, who analyzes the machinery market every day, it seems like. He's going to be talking about the 5 trends at auction that dealers need to know. So go to Farm Equipment, go look up the Iron Comps webinar. Again, that's next May 26th or next Thursday, May 26th. So go get registered. Don't miss out on that, because he'll provide a lot better detail into what we're talking about, and he'll have a lot of charts and graphs that can substantiate that data.
Right on. Yeah, it's good stuff, guys. Make sure you go check that out. I think Iron Comps is a big part of what we do when we're looking at used equipment values, especially. So, and just checking up on what's the auction inventory look like. Like I said a million times, and I will say this to the day I'm no longer in this business. That auction is 100% the canary in the coal mine, and it will absolutely. If you watch it die and you think you're going to be able to bring it back to life, you're wrong. It's going to stay that way, I promise. So you've got to pay attention to what's going on around you. So make sure you check out TractorZoom and Iron Comps there. Kyle, appreciate you being on the podcast, man.
Thank you, Casey. Appreciate you having me.
Right on, man. Well, I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook and Twitter, Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also go to MovingIronLLC.com, and that's where you're going to find the entire inventory of Moving Iron Podcasts, as well as blogs I've written. So go check that out. A lot of good information there. Moving Iron Summit's coming up, Nashville, Tennessee, September 15th through the 17th. Kyle and his crew will be there. They're actually going to give a little presentation about what's going on, and as well as they're great guys to just sit around and have a beer with and pick their brains about what's going on too. So highly recommend that you go out and check that out and go from there. So with that, I am Casey Seymour with Kyle McMahon. Let's go move some iron, folks. Out. You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.